thing that you do to remove a lot of the time learning is get a mentor. What's good, guys? Welcome to the Modern Day Trader channel and welcome to our second weekly meeting, Sam. So number 2, bro. How are you feeling? How's the week been? How are you doing, bro? Overall, how are you doing?
What's up, bro? What's up, everyone? To be honest, bro, like tired actually. My body kind of got to a point where I think I was on the edge of burnout this week. And I think I know those burnouts and not like being sick because obviously I was getting a few like flu symptoms, but it wasn't really progressing. And like I'd get symptoms and then I'd maybe take it a bit easier in the evening, get more sleep, and then the next day I can be fine. And if the next day then I have a hectic day, then kind of feel those symptoms coming up again. So definitely a bit of burnout. I think because it was a slower week, I was kind of just more conscious of how tired I actually was just coming up over the last couple of weeks. Um, but I think as tiring as last week and previous weeks were, episode 1, shout out to everyone who's watched it. If you haven't, please do give it a watch. Yeah, I think we've got the ball rolling and we're just keen to keep going with these weekly meetings. I think that's what we're calling it for now. But yeah, I think in terms of the week, I think I told you yesterday, it was a bit of a more like a mentally challenging week. Analysis-wise, I think most of the analysis played out as per what we had discussed last week. I think there was a few variations on JPY, breaking higher after that initial push to the downside when we thought that it actually confirmed that bearish bias, but it was you thought, right? And then, other pairs pretty much played out, but it was 4 trades for me this week, 3 losses, 1 break even. Again, all trades taken with 0.25% risk. So yeah, about 0.7 down for the week. And just zooming out, I think it's when I look at the actual weekly return, like it's actually not terrible. Like it's not even 1% down. And I think that's the whole risk management approach that I have right now in the prop firm challenge. It's like, it's for this exact reason. I think I got a bit caught up like in the week, like because of the sequence of results. And it's easy to see like, oh, had like three losses in a week, like not 1 week, like not 1 win, but like, okay, zoom out, it's only 1 week of the year, just like nothing. Zoom out even further, I was taking 0.25% risk, so didn't really lose much. So I think mentally, it's just that just helped me manage it a lot more. Majority of the trades were to the plan. I think it was only when I was doing my weekly ASR now, where I saw that one actually wasn't in alignment with our plan just because of one of my entry criteria, which is obviously that high momentum break of structure, what I thought was high momentum in the moment. Looking back in the hindsight, it just wasn't. It was a very corrective break. No clear signs that, look, institutional players are coming into the market at this point, we're shifting structure, because that's why I looked for the high momentum. Obviously, that's just the characteristic that I associate with that as my plan, and there just wasn't that. So I think there was a bit of that. Just recognizing that I deviated from the plan slightly. Much more of a psychological week, but again, like I said, the risk management sort of helped balance those emotions. Just doing that deeper review, you kind of see where the mistakes are that you made. And to be honest, this morning, there's a part of me that was like, okay, you know what, look, I'm grateful for these losses because there's lessons that come out of it. And without the losses, you wouldn't know where to look for further improvement, or you wouldn't know where you're making mistakes, because I think it's much easier to find mistakes in the losses than winners, because with winners, it's like you're just so euphoric that like you hardly think twice, when you are reviewing a winner. Obviously, sometimes you don't follow your plan and it does win, but more often than not, it's the losers that we look a bit more deeply into. So never a bad thing, but just I think to share just a share this very quick. So as you guys can see for the week, like I said, I was down about 0.7. This is your days sort of return, just block rate even 10 trades in halfway through this current sample size. As you know, we'll normally take about 20 trades, and then we look at where we can adjust plan going forward for the next set of 20 trades, or if there needs to be any adjustments. So about halfway through that, on a 40% one break-even ratio, these were the 4 trades that I was talking about, 2 losses, and then break even, and then that final loss was the USD zone long, JPY short, and then 2 Euro USD short positions. Then jumping to my FTML terminal, you guys can see same account, started on the 10th of November, obviously unlimited time frame. And then coming down here, I'm not sure why terminal isn't showing break even. But yeah, when you come down into the trading journal itself, you can see there was it's actually not showing either. This is this is the buy. Oh yeah, that's so buy USD ZAR, short on JPY and 2 Euro USD sellers. Those are the 4 trades for the week. So current balance is at about $9,723. That's approximately 2.8% drawdown. Still in a comfortable space. In the match drawdown. So that was my week. Again, like I said, more of a mentally challenging week, but I think lost a bit of the composure towards the end of the week. It was my last trade. It was a bit of I didn't trade it up and fully stick to trade it. But overall, I think in hindsight, a lot of lessons gained, and he's fought, find those small tweaks going forward in the new week.
Week was pretty decent, bro. It was pretty decent. I think it was challenging in the sense that I wasn't feeling well since Sunday. So after we had a meeting on Saturday, I went out for a bit to celebrate my birthday, and I just didn't feel well. I'm not gonna lie. I think I caught some type of flu of some sort, but at least it didn't hit me 100%. It was just my throat, my nose, and those types of things. So I couldn't go to gym, just because of health's sake, you know what I mean? And then I was sitting on 18 trades going into the week, and Monday was a quiet day, so I never had no trades. Tuesday was a quiet day, so I'm thinking, I'm sick, I'm at home. So I was at home on Tuesday. I'm like, damn, bro, no trades. What going, bro? What's up here? You know what I mean? I was like, damn, bro, the perfect time to actually catch some trades and be able to monitor and do everything. And I really can't do anything. And so, and then Wednesday came along. I think Wednesday started the week off on a high note. I'm not going to lie. Took 2 consecutive wins. And then I looked at and we'll jump in the journal now. And I looked at my journal and I realized I was actually on a 6 straight win streak, bro. And I didn't even realize, I was like, geez, bro, we're moving, yeah. You know what I mean? And I was like, okay, I see you, my boy Marcy. What? And then, the next
day was solid start to the week, bro. Solid start.
Bro, solid start. And then the next day, my boy, same time. I was like, the markets heard me. Market gods were like, hey, calm down, bro. Zero euphoria here, nothing like that, bro. And I caught hands. I caught some hands like Mike Tyson, bro. Hey, it was shy for a minute there. But at the end of the day, I just realized, I'm going to take you guys through a couple trades. I just realized personally that as long as you follow the plan, regardless whether it's winner or loser, you just need to realize that at the end of the day, all you can do is trade the plan and know that you're going to incur losses, but that's the expense essentially to make the winners. If you're in retail and you open up a business store to sell clothes, you need to understand that there's going to be expenses in getting the material in order to sell a t-shirt. There's going to be some offcuts or whatever the case may be. And that's exactly what a loss is, you know what I mean? But let me get into sharing my chart and I'll take you guys through that specifically. So let me just take you to the journal. So this was a journal for the month. So as you can see, for the year so far, I'm on 23 trades. And bear in mind, Sam, on Thursday, So I'm doing my 20 trade review on Thursday, and I'm realizing like, damn, bro, shit, this is like it's been a good trade. Like I'm up 2% after 20 trades. It's pretty decent. Like everything's moving, and I'm good, bro. You know what I mean? And so yeah, like I'm really chilling, and I'm thinking in my mind, nah, I can take this thing, I can run it up now. I'm basically break even on my accounts, and ah, Thursday. So I wanted to share my lot. Wanted to show you guys like there's no difference between what I did in my losses compared to what I did in my wins. So these are my losses. So the first trade, we had a daily being bullish, we had the 4H being bullish, and I had a 1 to 2 on this trade specifically because we had got 4H correlation. So all 6 pairs basically had a bullish 4H. So I can then anticipate that now there's going to be a high push to the upside. And essentially what had occurred was we had the pullback. I waited for the breakout and it just didn't play out. It is what it is. It's part of the numbers. And it's the exact same thing here. But then if I go to the next thing, this was the exact same setup. But what you can see is it played out. So all I could tell myself and all I can do is essentially just say, it's part of the plan. Numbers need to play out. You need to like lose to win, and you need to win to lose. And that's just it in trading, guys. That's just it. Let me show you guys my terminal. So here we go. This is the 10K account. And then let me just drag the 5K account over. So what you guys can see is I don't know what's going on with this 10K account. It's not like I've taken more trades, I've taken less trades. I think this is due to the technical difficulty that we experienced a couple of weeks ago, Sam, where I over leveraged by mistake and I just 1% for the 2 trades. Yeah. And then, so we currently right now sitting on a win rate of 48, and it's reflecting what we have in the journal, down to 2.5%. And then on the 5K account, we down, this is base, so we all break even on this account, but we down 0.5%. due to commissions, as I mentioned. So yeah, I think at this point, we are going to be jumping into the analysis.
It still sounds like a really good week, bro. I think it's crazy that we were both kind of not feeling so well. And I think it's just a result of obviously the past couple of weeks. But like you said, it's really just the cost of doing business. Losers are just part of the game. Winners are part of the game. We kind of just try to be as indifferent as possible to either outcome. As long as we follow the plan, as long as we're acting consistently, I think that's really what matters in trading. So yeah, jumping into the analysis, starting on dollar index. For the past couple of weeks, we've just been trading higher. We've been very bullish on dollar index. This has always been that daily high value area that we're gravitating towards. And I like that we got in there, and we got in there with a lot of momentum. You can see there was almost a build-up of liquidity here just below the actual level itself. And now we've reached there. On the daily, it looks like a break above. When I switch to the weekly, I'm not so sure because this indicates something else. Obviously, just with the win, and the win shows here failing to break above the weekly. So what I'll be looking for, I think, is, to be honest, it's still bullish from my point of view, because being on 6 and low, until we break below, I will maintain that bias that we are bullish. But I do see like a bit of a correction, which we already started this week, but I think just continuing into the current week, into this area here, where I think then we'll see what the next move or what's coming next on dollar index, whether that's to respect the sun here and then continue phase on the upside, or to break lower and shift the structure here, this uptrend structure, and respect this daily area here. Then obviously heading lower, targeting these potential extreme lows should we break this point. But I think short term, obviously useful for the first couple of weeks. I think we will be trading lower. Interestingly, should probably move on to the next pair. We're struggling to break this 1 hour level, and it's common theme on both dollar index as well as EURUSD, which you'll see in a bit. So yeah, there's potential for us to just keep going higher from here if that level holds, but it's a bit insignificant in market data. And I think really probably collecting a bit of liquidity to start trading a bit lower. So let's see how that plays out. Jumping to your 30, price still trading higher, price still bullish. Price has been in an impulsive phase over the past couple of months, to be honest. But transitioning now, I think, more into a creative phase where price discovery area, yeah, can go to the best all our lines, but this email structure that's been yeah, to see the stuff like to kind of from. So I'll have to use immediate price to gauge that. And just going down into the 4 hour structure is still bullish as corrective as it is. It bullish high. You see that movement is starting to slow down. But we found the structure investigated. No entry opportunity here come out and tag these equal highs. What we haven't done though is close above here and establish new structure. So dropping down into the 4 hour, where we can see as price obviously formed this bullish structure. We came down, we mitigated that POI. There was no entry for me just based on the criteria I look for, but we came up and we tagged these equal highs. What we didn't do though was close above this level here and establish new bullish structure. So for me at the moment, this pair or this index is in a bit of limbo until we get a confirmed close above there on the 4 hour, just for us to establish that new structure. And even dropping down to the lower time frames, just the way in which we almost failed to get a strong close above there. Just doesn't give me confidence that, I should be looking for positions out of these lower time frame structures here or wherever. Until this starts to print higher, just with a lot more confidence, I'm gonna stay away from US30 for the time being. Pound JPY, high time frame, I've said neutral. I think we got up to this daily level. We've struggled to break up there. We've corrected lower. This was this move where in the week we thought it was heading lower, but price has kind of just shot back up to this daily level. Could be that potential double top. Structure still technically bullish on this higher time frame, even though we are at this higher value area. But at the moment, I'm seeing price either continue higher or break lower and start trading to the downside. So I'm a bit neutral on this pair at the moment. It is starting to transition into more of a corrective phase. And when I drop down to the 4 hour, technically there is bullish structure here. So I'll wait to see if this plays out. Because the higher time frame is bullish, I'll need price to correct all the way down into the structure here. Probably drop down to the lower time frames, wait for an entry POI to form, and then once the entry POI is formed, then look for execution on those micro time frames. I think I'll look for as much confirmation here that this really is trading higher before jumping in, because the fact that it's neutral on the high time frame, it's in a corrective sort of phase. I don't want to be pulling the trigger for any setup that comes along. Neutral on pound JPY. I think that's why I've also just highlighted it there on the side, just for trade. So that going into the week, I just proceed with a bit of it sounds good. And then jumping down to EURUSD, I think to me, this is one of the most interesting pairs for the week. Mainly because I think I took a few losses on this, so it just led me to analyze it in a bit more depth. And what I look for on the lower time frames, I look for on the high time. And what see us almost forming now is this larger entry schematic And this could be, some sort of entry POI where we've got the run of liquidity. And this is a point here where I think we're either going to break lower impulsively, or we're going to trade higher to the upside and run that liquidity again. So I think a pretty determinant point in price. Looking at how we closed, clear rejection from that level on the weekly time frame. But dropping down to the daily, what I did notice was we obviously got to that level with a lot of momentum. And I was looking to short this pair the whole week. I got stopped out both times, but price almost failed to establish clear, momentum to the upside. And what I almost took note of was that it took 1, 2, 3, 4 days to almost cover the same area as one bearish candlestick, which is almost still a signal to me that, look, the momentum is still to the downside. We've reached a point where price has found a bit of a support, and that's normal at these key areas. But I don't think I'm jumping to the conclusion just yet that price is a buy from here. I think just looking at the high time frame of the weekly and mine, the daily, what I'm seeing momentum wise, and then even on the 4 hour, our structure's still bearish. I've got this POI with a confluence of imbalance that I'm looking for price to solve, as well as then the manner in which I think price is starting to trade higher. This is just clear corrective price action counter to the primary sort of direction that price is trading in. So for me, there's just a lot of boxes that are being ticked for a move to the downside. I think the pairs or price is almost just gathering a bit of liquidity for that expansion lower. And so do I feel like my positions this week were a bit premature? Probably. I think so. Doesn't mean they weren't valid. The first one, definitely valid. The second one wasn't. I know that I mentioned that. But it was essentially this area that I was looking to take that setup lower from. So I think bias, I'm happy with the bias, just looking at the way I approach this pair this week, regardless of taking 2 losses. When I zoom out now and look at the high time frame and all these factors, I do believe the bias is still short. I think it was just a timing issue that I had. And I would rather have a timing issue than a bias issue, because if I still have a bias issue, it means that I've got 2 obstacles to almost still overcome. I got to get my bias right, and I got to get my timing right still. So hence, look, the bias I think is okay, but it's just working on that timing now. When is that expansion actually going to come in? That I need to put a bit more focus onto. So yeah, I think early in the week, probably expecting this to come a bit higher. A lot of imbalance that needs to be filled up there, as well as then I think there is a stronger push coming off this level, but I see it more as just a correction into that 4-hour structure. And once we get into that 4-hour POI, then I'll be in execution mode again, looking to take EU lower. So yeah, definitely a favorite for the week, this EU short. And finally on USD ZAR, yeah, this pair's been, I'm a bit neutral on it. It didn't really play out as per the bias this week. It was really range bound, to be honest. But yeah, still looking at it. Again, we trapped within this range. We got that low, we got our high. Coming from the high time frame, we're anticipating price to come lower. And when I drop down to the 4-hour, price has shifted structure with this large move to the upside. I see it as a potential move into this double top area here. Obviously, given the new structure that's formed, I'm looking first for a mitigation of the POI. If that does occur, it's looking like a corrective move there, take price higher, and then potentially get that double top. That's another structure that we'd almost formed there, and then price potentially come down. So I think there's potential on this pair, but I think I need a lot more development on it. I'll only, for the time being, look to take any entries out of this POI to the upside. But if we do break this to the upside and start to shift structure on 4 hour, then obviously I can start to adjust the bias accordingly. But I think really just it's a bit trickier, and I'm trying to play it in between this range. So it's not a favorite at the moment, just because it does require quite a bit more discretion. Uh, but yeah, there's still definitely a potential opportunity to get it on USD. So, but our main focus, I think, will be Euro USD, any good mark US 30 and goes it's not feelers. But I think just in summary, dollar index short term seeing that come a bit lower, but still bullish. US 30 still bullish. Pound JPY neutral on that. I think it needs to develop a bit more, but it's in a key area where we could either shift structure or continue to the upside. Euro USD bearish on that, but still at a key level. Obviously, if we break the 4 hour, then the bias will shift. And then USDs are neutral, playing the range at this point. So yeah, that's the analysis for the week. How's players looking on your end, bro? What are you seeing? What opportunities you seeing for the upcoming week?
I think a lot of it is pretty much the same. And from our perspective, I think the markets could see decent movement now that we're out of the first week or so of like where you usually see a lot of news and a lot of fundamental events. I think we could see potentially clean moves now to the upside where we could see trends continue with trend reversals. So let's jump into the charts, guys. So looking at DXY, the current outlook on DXY is pretty bullish, especially from a daily time frame. And if you look at it, what you can see is Monday, the 7th of Feb or the 6th of Feb, pardon, the 5th of Feb. The 5th of Feb, what you can really see is that price action made a higher high. And in my opinion, I know Sam took a look at the weekly. I'm going to use the daily as my time frame of reference. And so like, if you're looking at what price action did over the past couple of weeks, to me personally, this is what I signify or I use as a very significant level in the markets. This is roughly 102,500 to 102,650. This is right here is my structural point of reference where I would consider price action to have changed character and push bullish. So usually what you would find after price action breaks the first level of structure is you'd get a high in the market, which you could see right here. And this high in market, I never really paid until we get the next higher high, which we got on Monday. So with that being said, I'm pretty bullish on DXY. I don't think I'm looking for anything other than a higher low to be formed and then a higher high to then be formed thereafter. So if you take this into account and just the way the markets move, what you would anticipate if you do jump down to the 4H, which we'll do in a minute, what you'd anticipate is for a higher low to be formed in the market in and around these areas, and then followed by a high high. So although I'm bullish, I do understand that the lower time frames could potentially have these pullbacks into areas like the 103 region. So jumping down to the 4H, what you'll be able to see is detail become a bit more clear. You'll be able to see the break of structure, the most recent break of structure, big impulsive moves to the upside, and we're leaving these imbalances in the market. So as you guys know, the market moves with impulses and corrections. So to the best of my knowledge, what I do know is that there is potentially a correction coming for DXY where we could potentially see price action pulling back all the way down to 103 to then fill this imbalance before pushing to the upside. However, that doesn't have to happen. Nothing has to happen in the market. All you can really do is have anticipation or order flow or anticipation of the market structures. What I would suggest too is another thing that could potentially happen is a break above these highs at 104,600. And when we get a break above those highs at 104,600, what you would then potentially see is a new higher high being formed. You'd be looking for points of interest in and around these areas, which would then become your new higher low, and you'd be anticipating that price action would then shift and continue. Now, I would want to mention that this whole setup would completely be invalidated if we do break below the 102,750 area. If we break and close below the 102,750 area, this whole DXY view being bullish is now, in my opinion, invalidated, and you can't necessarily look for buys anymore from my perspective. If we do start shifting structures on the lower time frame, which is the 4H and the daily, if we start shifting below the 102,750 area, then I feel like it will definitely validate the fact that these areas right here from a weekly perspective is a good area in the market. So with me being pretty much bullish on DXY, let me jump into EU and show you guys what I'm anticipating. Now, EU is it's a bit of a tough one, just because it's not, the daily structure specifically is not necessarily following or correlating to DXY. Because to me, in my opinion, EU right now is still bullish from a daily perspective. And so that means that essentially we can bounce off from these areas or from these points of interest. Now, whether we do or we don't, I don't know. What I do know is I'm leaning more to it being bearish than I am to it being bullish. And the reason for that is not just based on what I'm seeing on DXY, but also based on the past 4 days on EU. What you usually see is a big impulsive move to where price action would want to move, and then you see a correction which will take time. So what you can see in this impulsive move from the 2nd of Feb, you have 2 full days of big impulses, and then you have a correction that lasted double the time of the impulse. So that's giving me a bit more confidence and correlation that price action could potentially push to the downside. And with that, now if I add the DXY bullish, the bullish momentum that I'm seeing on DXY, what I can now do is I can start anticipating that price action could potentially push to the downside on EU. So with that in mind, let me delete this higher time frame. I'll keep it in mind in the back of my mind, but the reason why I'm taking it off is because in my opinion, if I was to weigh the scale, I'd say I'm 60% bearish and I'm 40% bullish at this point. However, to me, what I'd like my ideal setup would be for price action to break below these lows, form a new lower low, and then pull back to these lower highs in this market. But what I do understand is that the exact same, I feel like EU and DXY from a 4H perspective is really, they mirror images of themselves. And so what you could potentially see is a fall of this imbalance, and out of the point of interest, you could potentially see price action pushing to the downside and continuing down. Let's jump into pound yen. Pound yen is a bit tricky because if you look at it from a weekly perspective, and this is really the only pair that I looked at from a weekly perspective. If you look at it from a weekly perspective, what you can see is that, yes, we are in an area of interest, and we are in a high value area where we bounced off from for multiple weeks. And you can see that when we came into it in November, we just left it completely, and we came back multiple months later, or like a couple months later in January. However, looking at this current weekly's close, I can clearly see that price action had engulfed the previous week's close. And if I'm just looking at what the next candle could potentially do, if you look at these candles here, what you can see is that more when a candle stick closes bullish or bearish and it engulfs the previous candle, there's a high chance, or there's high volume or high momentum in that candle. There's a high chance that the next potential candlestick or the next candle could potentially be in the same direction. So with that in mind, what I have been doing is I've been going down time frames, and I understand that the daily is pretty much bearish still, but I'm anticipating that unless we break below these areas, which is 186, 150, unless we break below those areas of 186, 150, that we're going to push and we're going to break above these areas. And the reason why I'm anticipating that is because the lower time frame has shifted bullish. I think Sam spoke to the fact that we had these breaks above. We were anticipating bearish movement last week, early in the week, and we got it early in the week. We are anticipating lower lows to be created. However, price action shifted structure completely, and what you can see is that price action pushed to the upside. Now, if I was to place a fib on these areas here, and this is the weekly candle, what you'd be able to see is that the equilibrium, this the 50%, the equilibrium is roughly in and around this break and retest area. Now, I know that when you trade in smart money concepts, you at least want to see a 50% pullback of sorts, at least price action pulling back into equilibrium before it pushes to the upside and continues trend. Now, what this means essentially is that the weekly would then pull back, create the wick, and then flip bullish and push to the upside. And that's what I'm anticipating. Now, I understand that, as I mentioned, price action moves in impulses and corrections. So what you would anticipate is a correction. And once the correction occurs, you'd anticipate another impulse to the upside. And that's what I'm looking for. I'm looking for these pushes to the upside. Let's jump into USD ZAR. USD ZAR is trash. You can put this thing in the trash can, to be fair. It's really trash. It's ass. And I think from a forex perspective, we're bullish. But you can see this whole week we pretty much range. And so until we actually break out of this range, whether it be to the upside or to the downside, really, I'm gonna stay away from it. I have this area that I've plotted on just in anticipation that we could potentially break to the upside and continue. And the reason why I have it breaking to the upside and not to the downside to fill the point of interest is because I'm anticipating bullish pressure from DXY. And so with the bullish pressure from DXY, what we could potentially see is price action pushing to the upside, making a new higher high, and then you can then anticipate that price action would then potentially fill points of interest and then have that continuation. Let's jump into US 30. Now with US 30, I think this pair is interesting in the sense that we've been pushing to the upside, and it's naturally the way these types of markets move. I just don't see a potential entry until we make a clear higher high. And so I think for this pair specifically, I'm going to stay away until we make a new higher high, and then we have that pullback to clean points of interest. The way we did here, sort of, we made a clear higher high. We had these pullbacks in last week, or in this week at least, filling points of interest, and then we had a clean fill of what is now equal highs. So that's exactly what I'll be anticipating. I'll be anticipating for price action to make that higher high, clear these highs, and then we create a higher low, fill these points of interest, and then followed up by a higher high or at least equal highs. Until we actually break structure to the downside, all I'm going to do is continue looking for buys. But for this one, I'd stay away until we actually make that new higher high. And yeah, Sam, that's basically what I'm looking at for the week. So I'm bullish on DXY, bearish on EU, pretty much bullish on GJ with a pullback early on in the week. USD ZAR, stay away until it makes a new higher high, and then US 30, anticipating a new higher high to then potentially catch the movement to the upside.
An alignment. Yeah, I think we're definitely seeing very much price sort of playing out in a similar way. Again, it's going to come down to our own individual sort of entry criteria as to how we execute on these trades. But I think that's clear. Guys, if there's any pairs that you want us to break down, drop it in the comments below, and we can start taking a look at that for you. And I think just continuing from last week's Q&A, where we spoke a bit about routine and I think how to balance, trading and, working full time, and you've kind of got both of our perspectives. We're going to carry on with that kind of Q&A sort of segment of the show or the meeting. And again, if you guys have any questions that you are on your mind, or anything you need help figuring out, just in terms of the journey of trading, be it technical or whatever, again, drop it in the comments. We are literally here for it. This week, I'm going to ask Marcy a question. And I told him before the meeting, I'm not going to tell you what the question is, but I want you to answer it on the spot.
Yeah.
So getting to our question of the week, Marcy, I think in your words, where do you think the starting point is for someone who's just beginning to trade, or has just decided to start taking trading seriously, because there is a difference between the two. But yeah, where do you think the starting point is for either one of those individuals? Who's looking for the most efficient or quickest way to become a proficient trader or a profitable trader? How do you think the journey begins? What's your thoughts on that?
So for the first one, I'm assuming he doesn't know anything about trading. I tell him, go to Baby Pips. The same thing I tell everybody else. Go to Baby Pips, learn the terminology. And then once you learn the terminology, where most people actually I think most people don't get through Baby Pips. So then you know whether they're serious or not. That's why I always tell everybody, go to Baby Pips. I kind of suss out who's serious about trading and who's not by them coming back to me and saying, oh no, I went through Baby Pips. I went through the whole school and I understand what a candlestick is. I understand what a trend is. I understand patterns. I understand everything. And then I'll tell them, okay, scrap that. Now you understand what the basics of the market is and how it works. What you need to do now is get a mentor. I think, and this is for both the person who just learned Baby Pips and the person who, the second person in your scenario. I think the best thing that you do to remove a lot of the time learning is get a mentor. I don't think I had a stable mentor in trading. It was mainly me. Although I did a course for a month, I never had a stable mentor. My learning process took a bit long for me to get here. I've read books. I had to do all of those things on my own. But if I had a mentor, I can recognize the fact that I think a lot of those learning processes would have gone so quick. And I think once you have a mentor, you need to understand that every person has their own perspective on life. And similarly, how every person has been raised and they have their own perspective in life, that's the way your trading is gonna come about. You have your own perspective, so you're not gonna see the market exactly the same as your mentor. What you need to do is take what he's teaching you, him or she, take what they teach you and implement it and start making your own changes, understanding sample sizes. I think a big book that you need to read from the start is Mark Douglas, Trading in the Zone. You'll understand probabilities. You'll understand trading is not just about showing up and taking a trade. You'll understand everything that a profitable trader does. And the faster you can get into the mindset of a profitable trader, the faster you'll actually become a profitable trader and the faster you'll become a proficient trader, as Sam mentioned. So it's really just about understanding yourself. Now you might have to go through multiple mentors to understand that, and multiple trading strategies. But what you need to understand is that it's all about you, and every strategy works. It's not the strategy that doesn't work. It might work for one person and not work for you, but it's not the strategy. It's more likely than not your mindset or whether the strategy suits you as a person. Personally, myself and Sam are completely we're two different people in the sense of our trading strategies. I like to see my winners on a day-to-day basis. I like being able to say I win or lost within a session. Sam's able to hold these trades over multiple sessions and is able to hold the trade to a 1 to 3, 1 to 4, 1 to 5. However, I'm personally not that person. I can't hold for 1 to 3, 1 to 4. And I understood that from going through trades, going through my trading strategy and being able to review myself. And I think being able to be comfortable with yourself and understanding that you as a person and you just your personality and your character traits form you as a trader. And once you can do that, and once you can understand all of those, then I feel like you'll be a proficient trader. I honestly feel like you'll be a proficient trader. And I think really, Sam, it's the experience, bro. It's a journey. But I think there's sections of that journey that you can remove if you have somebody guiding you. And you can really move the needle a bit faster than most people who don't have that mentor. So I think that's what my main advice would be. Go through Baby Pips, get a mentor. Once you get a mentor, understand that the The trading strategy that they're giving you is not is that's not the problem. Your mindset's the problem. And so don't strategy hop. Stay on the strategy for 6 months to a year before you make a decision, and be disciplined in taking that strategy and taking trades. And yeah, don't forget to read the book from Mark Douglas, guys, Trading in the Zone. And that's my advice, bro. What is your quick advice be? Quick advice for that.
I'll probably just pivot off you, bro. I think I like everything you said, and I agree with everything you said. And something I was just thinking about while you're talking is, look, it's taken, I mean, this is our 6th or 7th year now of trading, being in the markets, but something I've come to realize is it doesn't have to take this long. The more people you meet, you realize it didn't take everyone this amount of time. So like Marcy's saying, we got our fingers burnt along the way. We strategy hopped here and there. I think there's a lot more resources available to cut that time, to avoid those pitfalls. And I think getting a mentor and having someone guide you through the process early on in your career is a big determinant on how much time it takes you to become proficient, to become profitable, because it's you treat it as a business. You treat it like proper professional career, and always make that reference. You wouldn't just wake up one day, decide you want to be a doctor, and walk into a hospital and treat a patient. You need to approach trading in the same way, and that's what Marcy was saying. It comes down to mindset. What do you define as trading? Is it gambling to you? Is it professional investing? Is it investment management? The way in which you approach it, the seriousness, consistency, the dedication. These are all things that contribute to curbing that learning time and sort of taking the quickest route to getting there. And the quickest route, just because it's the quickest doesn't mean it's going to be short. In other words, I think it's a journey that requires patience as well. But the more you kind of accept these things and come to it, and get the mentor and do the self work, definitely that'll put you on the best possible path. But yeah, I think brilliant answer, bro. I think that's a lot of value to someone who's just starting out, a lot of value to someone who is deciding whether they want to take that leap or not. Someone who, again, is confused in the process, not too sure where to head next, has been strategy hopping and just needed to hear that, look, it's not the strategy, it's you. So hope you guys took a lot of value away from that. If you've made it this far, thank you so much for jumping on episode 2 of the Modern Day Trader channel. Please don't forget to like this video, subscribe, and drop any pairs you want us to analyze in the comments, any questions you want us to break down in the comments as well. And we'll see you guys next week. Have a good week.